Hello and welcome to another Mr. James Accountant tutorial. Today we'll be looking at the 2021 Paper 2, Unit 2, Module 2. So let's get right into it. The first part is explain each of the following costing methods, given one example of a type of business that may use each method. First one is job order costing and second is process costing. Job order costing is a costing system used where the product is made up of identifiable units or batches. So there must be distinct units or batches. The cost of raw materials, direct labor, and overheads are accumulated for each unit or batch, and total cost is ascertained. An example would be a home construction and accountancy, or even services like accountancy services. Process costing, a costing system where the product consists of a mass production of identical items which passes through the same production processes. The cost of raw materials, direct labor, and overheads are accumulated for each process as the product passes from process to process. The cost per unit is determined by dividing the total production cost by the number of units. And since it's only 6 marks, you would have covered enough in there to get a mark for each. Once you identify it as identifiable units, and here is mass production, same unit, and they pass through same production processes, you should be able to get the mark here. We move on to part B. Let's read what is required first. We are required to calculate each of the following: the predetermined overhead rate used by Philips Electrical, and the total cost of ending work in process inventory for February and March, and the prime costs incurred during the month of March, and the cost of goods manufactured for March. So basically we are looking still at a job costing system, and from those questions there we can tell we are looking at the gross profit system. So let's take a look at the data given. We're told that Philips Electrical is an electrical company that engages in installation and rewiring of customers at buildings. Joan London has recently been hired as the new Chief Financial Officer for the company, which uses a job order costing system. Joan understands that the system utilizes normal costs and that overhead is applied based on direct labor hours or direct labor costs. The job order cost sheets for the month of February 2021 and March 2021 are shown below, all figures rounded to the nearest dollar. Okay, so we can round off the figures to the nearest dollar. And we are given two sets of figures, one for February and one for March. We have the job numbers here in that materials cost, labor cost, and the applied overhead, and the total cost here. And then we are told whether the job is completed or not at the end of the month. This is to determine whether they are in working process. And we have some boxes with stars which shows that the figures are missing there. Let's take a look at the additional information. All at month end, the jobs were not completed. That's the star. Those are the star. Right? Overheads are applied and recorded in the month of completion. Direct materials and direct labor are recorded as incurred. In addition to jobs started in March, job number 1580 was continued and completed during the month. Okay, so let's get into the answers and the workings. Right, the applied overheads. To apply overheads, you use the formula POHR by direct labor cost. Therefore, if you want to find the POHR, you have to do the opposite. You take the applied overheads and divide it by the direct labor cost. So for job 1578, it will be 2,500 over 2,125, $1.25 per direct labor cost. So for every dollar of your direct labor cost, 1.25 is, or $1.25 is overhead. Job number 1580 is work in progress for February, and job number 1582 for March. So let's find out the value of the work in process there. For the work in process, we have the materials, the labor, and the overhead. These are given, taken straight from the data. And this one, the overheads has to be calculated using the POHR that we calculated here. So it's on direct labor costs. So we take the cost from here and we multiply it by the POHR. So that's it up here, right? And we will get 7313 for this February 1580, and March 1582 is 12,000 by 1.25 equal 15,000. When we add them down, we'll get the work in process for February and March. So you can verify these figures that they are coming from the table. That's in case I made a mistake. Okay, and that's the other part of it. Prime cost for March. For prime cost is equal to the direct materials and the direct labor. So we take the direct materials for all the jobs, add them together, and the direct labor, add them together, and then we add the two, we'll get the prime cost. The cost of goods manufactured, we take the prime cost, and we calculate it up here, add on the overheads, and then we will take the work in processes that we just calculated, add it all on the one for February minus the one for March. Okay, so we take 61,183, add the overheads applied, we get the total production cost, and then we add on the WIP for February minus the ones for March. And incidentally, this is the same format for your manufacturing account because we require the same thing here. Let's take a look at part C. Let's see what is required first. Calculate the cost per unit of each of the following chocolate varieties using the traditional costing system. decadent and monumental. So traditional costing would be either job costing or process costing. It looks as though it's job costing again. Determine the activity cost driver rate for setup costs and inspection costs. And so we're moving over into activity-based costing. And then we have for the smooth chocolate variety, compute the estimated overhead cost per unit using the activity-based costing system. I'm not sure what it is they really require here, but when we look at the data, we would see. So we have James Landry has recently been appointed the financial controller of a new confectionery company that makes permanent chocolates. There are three varieties of chocolates: decadent, smooth, and monumental. Chocolates are made in batches of 1,000. The following data was captured for the first year of operations. And we have here the per unit data and per thousand data. Okay, so this year per unit data is most likely for the job costing, and the batch is for the activity-based costing. Okay, we are given some activity levels and activity costs, overhead costs. Notice these two boxes here are empty, right? So it means these are not all the overheads, there may be some others here. So let's get into the answer. The cost per unit using traditional costing for decadent and monumental. We just add the three elements of cost together and we get the total unit cost. 225 for decadent and 29 for monumental. Next we have the activity rates for setup and inspection. We divide the overhead costs by the activity levels and we get 950 per setup hour for setups and $348 per inspection hour. Next part, like I said, for the smooth chocolate variety, compute the estimated overhead cost per unit using the activity-based costing system. So you wouldn't be certain if they just want you to use these two here, but it doesn't look that way because it's 8 marks compared to the 4 marks over there, right? So we have to go back to here and calculate the total overhead costs. This is the approach I will be using, and find out how much is the unapplied cost for these two items here. Okay, so first you need to work out the total overheads. For the total overheads, we just take each item under the traditional costing 10,000 by the amount per unit, the applied overhead per unit, and we will get a total overhead of 382. From that, we have already allocated to setup and inspection 175,000, so we have other unapplied overheads of 207,500. All right, now so we have to calculate activity rate for this here. What is the Okay, and we'll use machine hours since for smooth is machine intensive rather than labor. Okay, and we take the 207,500 and divide it by 2,000 machine hours, we'll get $104 per machine hour. MH is machine hour, okay? Now we can go into the answer. Answer for smooth, the overhead cost per batch of 1,000 would be 950 for setup by 1 hour, inspection 348 by 4 hours, and machining 104 by 1248. Total batch cost will be 35.90. Overhead cost per unit will be 35.90 divided by 1,000 in each batch here. We get 359 per unit. Okay. Um, Go on to the next part. Part D. Complete each of the following sentences by writing the appropriate clauses labeled A to E in your answer booklet. And we have some phrases here. Now, if you have been using the Cape Study Guide for Unit 2, this is coming straight off page 143, I think it is. Okay. And all we have to do is pick the letter from there and place it in here. Okay. Absorption costing income will equal variable costing income if the production is equal to the sales. And absorption costing expenses all the current period fixed overhead costs as well as it release some of the fixed manufacturing overhead costs from inventory. Okay, that is the opening inventory. Absorption costing income will be greater than variable costing income if production is greater than sales. And finally, the total amount of fixed overhead costs is expense as a period cost under variable costing. Okay, so that brings us to the end of this video. I hope it was interesting and informative to you. If so, you can give it thumbs up, and I would be looking forward to seeing you in the next video.